Welcome back to Trading Basics with Jared Roboski. We're going to jump into this next topic on moving averages. Thank you for sticking with us so far. Moving averages are a very powerful tool, and if you can search for moving averages in the indicators tab that I showed you last time at the end of the last video. You can click right here on indicators and just search for moving average. And then what will happen is you'll have a moving average come in. You can use this KC-EMA in your search. That's the one I like to use, and we'll get into my setup after this. But I want to start off really simple. In this strategy here, I've just got this yellow line. That's an EMA. An EMA is an exponential moving average, and an MA is a simple moving average. An exponential moving average has a heavier weight on more recent price action. And what that means is it's more reactionary. And an MA is a simple moving average. And what that is, see these inputs, my MA is a 10. So what that is that's an average of the previous 10 closes on that time frame. So it's that simple. It's just an average of the previous 10 closes. Whatever time frame you use is what it's going to average. So we're just looking at a 10 and a 21 EMA. And why this is a really simple strategy is when these cross each other, when MAs cross, it can signify a move that's about to come. So what we can see here, you had several fake outs along here, but then we had a cross. Once we crossed the upside and you broke out, right, we can use a horizontal trend line like we talked about in the previous episode. You could have said, okay, looks like we've topped out twice here. So let's put in a trend line. It comes back up, boom, we break through it. Then we back test right here and bounce off. And look at these moving averages. The lower time frame moving average is the 10, and that's above the higher time frame moving average, the 21. So that's a bullish situation. And you can see we have a really good uptrend going on. And moving averages can also provide support or resistance. Notice how you get a bounce not only off of this horizontal trend line, but also off this 21 moving average right here. And whenever you get something that lines up like that, let me blow this up a little for you so you can see this better. Then that's a more powerful move generally. And that tells me that I've got a pretty good trade on my hands. Let me make this bigger. Right? So we got this rejection, rejection. And then the third time we break through it, come back. So when we break through, the way I trade is I don't like to chase these. I'm not a breakout trader. And the reason why is a lot of these can be fake outs. Look at this wick here. Right? A breakout trader can get trapped thinking, oh, that should be a good trade. I'll just trade that. We gap here. They say, hey, you know what? Maybe we'll close this gap here and it'll come all the way up here. So this thing comes here and then boom, end of day, it shoves back down. Second time we attempt to break this area, shove back down. Third time we break through it. Okay, good deal. Where am I going to enter a trade? I'd wait for a back test. We got a trend line and a moving average lining up. So let's look at some more of these moving averages and see. another powerful cross. We trend up. Then look what happens when this cross happens, right? You break that back down below here. It pulls back. Price action is almost like a magnet towards these moving average crosses. You'll notice this a lot. When you get a moving average cross after a long time that they've been on top of each other, and then the lower time frame crosses to the downside, that's bearish. It pulls into it. This would have been a perfect area to take a short. You're getting a bearish cross and a pullback into it, and an easy area to manage your risk on, right? So that's how you can use moving averages to take trades. Same thing here after this move up. Okay, you miss a move, it fails. You know, we bounced off this moving average multiple times. Boom. Once you gap down and you failed here, you should have been out of a long. If you longed going up, you break out, retest. You can buy here. Goes up, back test, continues to go up. Once you fail and you break below here, you exit, right? You've broken through your support. But now you've broken down. Where would you take a short? I would personally wait for a pullback into the bearish cross right here. So see, we have a cross right here where the 10 is crossing to the downside of this yellow 21. So that's a bearish cross. And then you can wait for this pullback, pulls back into this cross. You could have shorted from this area. And look what we got. Continue to the downside. And look where it bounced again. Off of this horizontal trend line, you get a big bounce. Got a little bit of an overthrow. But we'll talk about risk management later. This would have been a good area to take another long. And look at this, how you get a bullish cross here, but it was quickly a fake out. You have a big gap down, continues back to the downside. And what will happen on these moving average crosses, once you start adding in more like I have, show you my moving average setup here. So, where's my white? So I like to use the 21. That's my yellow 21. My green 55. This blue is a 100. This white one is a simple moving average, 200. And then this purple one is an exponential moving average, 200. And these crosses, when these lower time frames cross to the downside of these higher time frames, it becomes more and more and more powerful, right? So that's how we know when we zoom out, we know we're in a really big bear trend. See, when we zoom out on this SPY, look at this move. This was your COVID crash. All the lower time frame moving averages got below the higher time frame moving averages. Very powerful downside move. Bounces up. You get back above this white 200. The 200 moving average is a very, very powerful moving average. One of the simplest ways to think about it, on the daily time frame, is if you are above the 200 simple moving average, this white line, then it's considered the market is bullish. If you're below this white 200, the market is bearish. And you can see how much this is respected throughout history. I mean, look, you get bounce continuation. Once you break here, comes back test, failure, boom, big downside. Breaks back above it, bounces off of it multiple times in this bullish trend, fails, breaks below it, boom, big bear market. Breaks back above it. This was after COVID. Government spends a lot of money. We skyrocket. We're not only above the 200, but look how we're staying above even all these lower time frame moving averages. That tells you how powerful this bull trend is, right? And then once we lose this blue 100 eventually, we bounced off that several times in this bull market, this previous bull market. Once we lost that, got pretty bearish. Broke below the white 200 for the first time. And remember how I said price action will pull back into these crosses. You start having a bunch of bearish crosses right around here, right? All these lower term time frames, moving averages are starting to cross to the downside of the higher term time frame moving averages. That's bearish. So what happens? Price action pulls back into that. So this is a good area, would have been a good area to take a short from, right? Goes back down. And then look at this. This bull market, we've stayed under this white 200 for quite a while now. Now on this recent move up, we did break above it for the first time in a while. You can see since back here, broke above it, closed above it, very important, closed above it. Then the very next day, retest. See, on that wick, we back test it, bounced, closed above it again. So we had to open and close above it. And then we had a pullback here on the open, this daily open, but the close was really good and closed back above it again. So we broke through that and we closed above it. So to me, it looks like this trend will continue. We'll see. And we're getting a lot of bullish crosses, right? All these low time frame moving averages are starting to cross to the upside. Thank you very much for joining me on moving averages. The next topic we're going to cover is on consolidation. And we use that to make some trades as well. It's a lot of how the way that I trade is I use a lot of consolidation and I use these parallel channels and stuff like that. So I'm excited to get into that subject next. Thank you for joining me on moving averages. If you need anything or have any questions, feel free to reach out. My contact information is in many of my videos. Just give me a shout. And please like and subscribe to my YouTube channel. I put out content every day. Thank you very much. Have a wonderful day.